A warm welcome to everyone joining us here today on this webinar hosted by International Ethics Standards Board for Accountants, the IESBA. Today, we'll be discussing the proposals in a tax planning and related services exposure draft, which was issued on February 17, with the closing date for submission of May 18. My name is Channa Wijesinghe. I'm a principal with IESBA and a staff lead on this project supporting the tax planning task force. Next slide, please. We're very fortunate today to have with us Channa Wijesinghe, who will be taking us through the key proposals in the exposure draft. Channa has been a member of the IESBA since January 2022. He's currently the CEO of the Accounting Professional and Ethical Standards Board, IESBA, and was the inaugural technical director during IESBA's first decade of operation from 2007 to 2016. As a CEO, he manages the implementation of the board strategy, national and international stakeholder engagement, operations, and technical work program. I would like to brief the participants a few house rules before we start. You're welcome to post your questions on the chat function anytime during the session, and we will endeavor to answer all your queries during the Q&A session at the end. You may raise your hand function to post your question should you wish to do so. The presentation slide deck will be made available to participants after the session today via the email you registered. We will also be posting a video of the webinar in a due course, and you'll be able to access it at your convenience. Next slide, please. Some of you will be very familiar with some of the news headlines in relation to organizations or individuals who have been criticized or found to have breached the Code of Ethics or Code of Conduct in carrying tax planning activities. Starbucks, as few of other famous household names, have been found to not be meeting the corporate tax obligations in the jurisdiction that they operate in. Separately, a tax practitioner was found to have breached the fundamental principles of Code of Conflict of Interest for sharing confidential information about government plans to target multinational tax avoidance with the firm's clients. These are just some of the examples of cases that's prevalent in the market these days. We won't be going into detail of some of these cases, though these are just some of the type of scenarios we like to highlight where we view that the Code of Ethics can provide some form of guidance to professional accountants should they encounter an ethical dilemma in these circumstances. Next slide, please. For those of you who haven't been following the project as closely, in early March 2022, the IESBA announced that it will host a series of global roundtables on this project, and it is aimed to bring together a broad range of stakeholders to discuss the state of play on the topic of tax planning. And this is to explore how the IESBA can formulate a proposed ethical framework to guide professional accountants in business, PIBs, and professional accountants in public practice, PAPPs, when providing tax planning services. Next slide, please. The 3 global virtual roundtables were organized to cover specific regions, as you can see in the chart in front of you, which is the Americas, Europe, Middle East, Africa, and Asia Pacific. A total of 100 delegates participate in this event, and they represented various stakeholder groups, including regulators, public authorities, representative of the legal profession, national standard setters, preparers, professional accountancy organizations, firms, and academia. The next slide, please. The input we received was rich and diverse and highlighted how intertwined, complex, multi-dimensional the ethical consideration can be in addressing tax planning services. Not surprisingly, the interactions between tax laws of different jurisdictions and cross-border situations were noted as an area needing particular care and sensitivity. The discussion we had at the roundtable generated some initial practical observations. And the IESBA is of the view that when developing a principle-based framework is the appropriate way forward because of the wide variety of tax laws, regulations, and practices around the world. Equally, it will be important to avoid being drawn into analyzing the merits of a particular tax strategy plan or adopted by the employing organization or clients, judging the merits of the tax regime or strategies or jurisdictions, or debating the tax policy. Next slide, please. And the next one, please. The IESBA proposes an outline of ethical framework to provide practical guidance that will be globally applicable without being overly prescriptive, to assist accountants in exercising their judgment in navigating complexity and uncertainty of tax planning, and assist them determine the appropriate course of action in the certain circumstances. As such, we're proposing 2 new sections, 280 for PAIB and 380 for PPP. Both sections will apply to all entities, whether it is a public interest entity or a non-public interest entity. Section 380 will apply to all types of clients. In this slide deck, we also have included the link to the explain memorandum, where we provided more detailed explanation on the various proposals. But without further ado, I'll pass the floor to Channa to take you through the key proposals in the exposure draft.
Thanks, Carla. Welcome everyone, and good morning, good afternoon, or good evening based on your location. So Carla has taken you through the first part of the presentation, highlighting the importance of this public interest project and the proposed ethical framework for tax planning. As Carla mentioned, the rationale for this project is the recent tax scandals such as the Pandora and Paradise Papers. These scandals have focused the public, government and regulatory bodies of multiple jurisdictions' attention on the professional practices and behavior of professional enablers such as accountants and lawyers who are involved in developing tax minimization strategies that stakeholders perceive as aggressive. In light of these developments, the IESBA acknowledged in its 2019-2023 strategy and work plan a need to address the ethical implications of aggressive tax planning. And as shown on this slide, there are 2 proposed equivalent sections, 280 for professional accountants, or PAs as we will call them in business, such as management accountants, finance managers and CFOs, and section 380 for PAs in public practice. In the interest of time today, the presentation will focus on PAs in public practice, but keep in mind to also review section 280, which mirrors these provisions, but in the context of an employer-employee relationship. So firstly, we should also look at the definition of tax planning services, so you can see the scope of the project. So tax planning services comprises a broad range of services designed to assist a client, whether an individual or entity, as Carla said, in structuring the client's affairs in a tax-efficient manner. So that is the definition. And also in the proposed standard, we have defined related services as those that are based or linked to a tax planning services, whether provided by a professional accountant or another party. So for example, such services could be assisting in resolving a tax dispute with an authority on a certain tax planning position, or preparing the client's tax return that reflects the position in the tax planning arrangement. Next slide, please. So stepping back a bit, the Public Interest Oversight Board, or the PIOB, highlighted 3 key public interest issues concerning this tax planning project to the IESBA in its report in March 2022. Firstly, promoting a consistent ethical behavior of PAs providing tax planning services. 2, raising awareness of risk associated with unacceptable tax planning. And 3, promoting sustainability principles, including transparency. The PIOB also noted that achieving consistent ethical behavior of PAs in relation to tax planning is a critical outcome and will set high expectations for the profession. So the key proposals in the ED is on this slide. And firstly, we will discuss the PA's role in tax planning process with the obligation to act in the public interest. Then we will look at what and how PAs can establish a credible basis for tax planning advice. After that, we will consider the overall tax planning advice or recommendation, which we have internally been calling the stand-back test. We will also consider issues relevant to multi-jurisdictional tax benefits. Then consider how to apply the conceptual framework in the code to tax planning when navigating circumstances of uncertainty. We'll also look at how to deal with disagreements with a client or employer, and finally consider guidance on documentation. Next slide, please. At the global roundtables that Carla spoke about, participants acknowledge that PAs providing tax planning services play an essential public interest role for their clients and employers. And as you would be aware, the very first paragraph of the IESBA code says that a distinguishing mark of the accountancy profession is its acceptance of the responsibility to act in the public interest. Next slide, please. The IESBA has not attempted to define public interest in the context of tax planning, but we acknowledge that PAs play an important role in tax planning as they facilitate a more efficient and effective operation of the jurisdiction's tax system, which is in the public interest. A proposition we heard during the global roundtables is that if the PA has performed the tax planning activities in compliance with the relevant laws and regulations, then they have acted in the public interest, as the legislators and regulators would have considered this when they developed those laws and regulations. There's also an acknowledgement that clients and employers are entitled to organize their affairs for tax planning purposes and are responsible for paying taxes as determined by the relevant laws and regulations. The PA's role is to advise the client or employer how to meet their tax planning goals and not to circumvent them through tax evasion or certain tax minimization schemes, although not illegal, might create threats to compliance with the fundamental principles. In these situations, reputational risk to the client, employer, and the profession is a vital consideration. Next slide, please. So paragraph 380.4A2, which you can see on the screen there, captures what I spoke about from the PA in public practice perspective. And there's an equivalent paragraph 280.4A2 for PAs in business. We took into consideration the feedback we heard during the outreach activities. And as I said before, acknowledge that clients are entitled to organize their affairs in a manner to achieve their tax planning goals. And they do have a responsibility to pay taxes as determined by the relevant laws and regulations. Next slide, please. During the fact-finding phase of the project and the global roundtables, stakeholders commented that in providing tax planning services, PAs might sometimes face situations where the legislative intent behind tax laws is unclear or uncertain, and the related regulations lack clarity. IESBA agreed with this observation and proposes that PAs must take necessary steps to establish a credible basis for providing a tax planning advice. We acknowledge it will vary from jurisdiction to jurisdiction. In our outreach activities, we heard various terms to describe what I'll call a reasonable basis. And we settled on credible basis, as that was a term we heard most from stakeholders. Next slide, please. In drafting the provisions, the IESBA deliberated various formulations that could convey the board's intent for a PA to proceed with providing a tax planning service or advice. The issue was to develop a drafting approach to respond to concerns, not to preclude instances where the PA could provide the advice if the tax planning arrangement did not have a credible basis in the laws and regulations. For example, a client may be considering a tax planning arrangement that does not have a credible basis in laws and regulations and needs the accountant's advice to explore options so that it could have a credible basis. Or alternatively, it could be that the client may advise the PA of a transaction that has already occurred and that does not have a credible basis in laws and regulations, and therefore needs advice on how to address it so that it can be resolved with the authorities. So the credible basis is anchored to the applicable laws and regulations of the jurisdiction. Next slide, please. So the relevant provisions for recommending a tax planning arrangement based on a credible basis is on the screen there. So it's from R38011 to 3811A2 for PAs in public practice. While determining whether there's a credible basis will require PA to exercise professional judgment, it must be based on the laws and regulations prevailing at the time of the assessment. If the PA determines that there's no credible basis, as I said before, that doesn't preclude the PA from explaining to the client the accountant's rationale. And the determination of the credible basis will require the PA to exercise professional judgment. Let me briefly talk about some potential actions that a PA might take to establish a credible basis. So this will be in paragraph 3811A3. It's not on the slide, but you can have a look at it on page 28 to 29 in the exposure draft, where the link was provided before. So you could review the relevant facts and circumstances, including the economic purpose and substance of the arrangement. You could review legislative proceedings that discuss the intent of the relevant tax legislation, or you could review relevant literature such as court decisions and tax authority rulings for guidance. You could also consider whether the proposed arrangement is common practice that the relevant tax authorities have accepted in the past and not really challenged. And another consideration is how likely the relevant tax authorities would accept the proposed arrangement if all the relevant facts and circumstances were disclosed. You could also consult with experts within or outside the firm or organization. And in certain instances, maybe you can directly consult with the relevant tax authorities also, where this is possible. Next slide, please. So this is the consideration of the overall tax planning advice or recommendation, which we are calling the stand-back test. The IESBA believes that when the professional accountant gets to the stage of determining whether to proceed with the tax planning advice, it is critically important that this stand-back test is performed due to heightened public attention on the negative consequences caused by tax avoidance due to the recent tax scandals such as the Paradise and Pandora papers that Carla mentioned at the beginning of the presentation. Next slide, please. The essence of the stand-back test is that in determining whether to proceed with the advice or recommendation on the tax planning arrangement, the professional accountant considers the reputational, commercial, and wide economic risk and consequences. Let me emphasize that it is a consideration, and in most cases, it would be straightforward. However, it will be an issue when you come across your Starbucks type scenarios. This is a good faith consideration based on the PA's knowledge of the context and the circumstances at the time. It's not about hindsight or someone else's judgment, nor is it about tax morality or social justice. Next slide, please. So this slide has the relevant provisions for members in public practice, and there are equivalent sections in section 280 for PAs in business. Please note that when you get to this stage, that there's already a credible basis, and then you need to perform the stand-back test. Reputational and commercial risk pertain to personal or business implications of having a prolonged dispute with the tax authorities, which may involve adverse publicity, fines, and penalties. And I guess the example is what Carla spoke about at the beginning of the presentation, the two case studies. The wider economic risk relates to the arrangement's relative impact on the jurisdiction's tax base, or in some cases, it could be multiple jurisdictions. This test will also assist with the OECD's base erosion and profit shifting initiative to address tax avoidance, to ensure that the profits are taxed where the economic activities generating the profits are created. This test is a critical public interest element of this framework, as it will make the professional accountant consider the potential for any adverse consequences in light of how stakeholders might view the tax planning arrangement. If tax planning is carried out in accordance with the spirit and intent of this tax planning framework, it could also contribute to the long-term sustainability goals of the organization. If after considering the matters, the PA decides not to recommend or advise, then paragraph R380.13 proposes a requirement to inform the client and explain the basis for the PA's conclusion. And a similar provision exists in section 280 to inform the PA's employer. Next slide, please. Multi-jurisdictional tax benefits also create threats to the fundamental principles. A client might obtain a tax benefit from accounting for the same transaction in multiple jurisdictions, especially if there's no tax treaty between the jurisdictions. Next slide, please. In these circumstances, while the client might comply with each jurisdiction's tax laws and regulations, the professional accountant might advise the client to disclose to the relevant tax authorities the particular facts and circumstances and the tax benefits derived from the transaction in the different jurisdictions. Relevant factors the PA might consider in determining whether to advise a client to make such a disclosure include the significance of the tax benefits in the relevant jurisdictions, the likelihood that other entities in a similar circumstance to the client are taking advantage of the tax benefits, and if there are any other factors that IESBA should include, then please let us know in your submissions. It was also recognized that when dealing with the complexities of cross-border transactions, PAs and firms would either need to have the in-house expertise or engage appropriate experts. However, the issue of external experts is beyond this project's scope and is being addressed by a separate IESBA project. Next slide, please. Now we get to the stage of how to apply the conceptual framework of the code to navigate the gray zone of uncertainty. Next slide, please. So IESBA has observed that tax planning services could fall anywhere within this broad ethical spectrum from what is considered clearly legal or the green zone to what is considered clearly illegal, which looks like brown, but maybe should be red. So therefore, ethical consideration applies to PAs providing tax planning services all along the spectrum. However, the perception of professional accountants' ethical behavior in carrying out tax planning services that, while not illegal, are perceived as unacceptable tends to arise within the boundaries of the gray zone. We know that it is challenging to identify the appropriate terminology to describe the gray zone of uncertainty, and accordingly, we have not defined the gray zone. With respect of what is something that is clearly legal, that is already addressed in the no-CLA provisions of the code. Next slide, please. So IESBA has proposed guidance to acknowledge that a professional accountant might encounter circumstances giving rise to uncertainty as to whether a proposed tax planning arrangement will comply with the relevant laws and regulations. So some examples of circumstances that create uncertainty are given on this slide. For example, it could be the difficulty in establishing a factual basis. There could be lack of clarity in tax laws and regulations, or there could be gaps in the tax laws and regulations. There could be a lack of clarity regarding the economic purpose and substance of the tax planning arrangement. And you would see the emphasis on the economic purpose and substance in several sections of these proposals. And this is to emphasize that you cannot have artificial arrangements. Then also another issue could be inability to identify the ultimate beneficiaries of a tax planning arrangement. Next slide, please. Where there is uncertainty with respect to the tax planning arrangement, the PA must discuss this uncertainty with the client, and this is provided in paragraph R38016. The discussion will serve several purposes as shown on the application guidance, such as explaining the PA's assessment and likelihood of the tax authority's acceptance of the arrangement, considering any assumptions that need to be made or changed, obtaining additional information from the client that may reduce the uncertainty. Then there should also be consideration of reputational, commercial, and wide economic consequences. And also maybe you can discuss potential courses of action to mitigate the possible adverse consequences. Next slide, please. So here, these are references to provisions that show how to apply the conceptual framework of the code to navigate the gray zone of uncertainty by identifying, evaluating, and addressing threats to the fundamental principles. Generally, the types of threats that might be created in respect of tax planning are self-interest, advocacy, or intimidation. Examples and further explanations are provided in paragraph 38017A1. Factors that are relevant in evaluating the level of threats are given in paragraph 38017A2, and some of them are the degree of transparency of the client, whether the proposed tax planning arrangement has a clear economic purpose and substance, nature and complexity of the underlying business transaction or circumstance, and then also the significance of the potential tax savings. So the PA can navigate the gray zone by either eliminating the threats or addressing them by developing safeguards. So actions that eliminate the threats are given in paragraph 380(17)(a)(3), and some of them are referring a client to an external expert outside the PS firm who has the necessary expertise. Where possible, obtaining an advance ruling from the tax authorities. And if there are wider reputational and commercial risk, advising the client or employer not to pursue the arrangement. Potential safeguards are given in paragraph 380(17)(a)(4), and some of them are structuring the tax planning arrangement so that it has a clear economic purpose and substance, or is based on common practice that is unchallenged in that jurisdiction. Obtaining an opinion from independent legal counsel regarding the interpretation of the relevant tax laws and regulations, having an appropriate reviewer review the work performed, or providing full transparency of the tax planning arrangement to the relevant authorities. Next slide, please. So now we will move on to disagreements. So invariably, there'll be disagreements with a client or employer concerning tax planning arrangements. And the proposals provide some guidance on how to address disagreements and escalation process. Next slide, please. So the proposed paragraph R31819 requires the PA to take steps if they disagree that a tax planning arrangement that a client wants to pursue has a credible basis. If the client wishes to pursue the tax planning arrangement against the PA's advice, the PA shall consider advising the client to communicate this to the management. And some cases, based on the laws and regulations in the jurisdiction, maybe you can alert the tax authorities or the external auditor. But remember, it's just a consideration of options. The PA should also consider communicating the details of the disagreement with those charged with governance if it's deemed appropriate. And then depending on the client's response, the PA shall consider withdrawing from the engagement, and this is provided in paragraph R38021. Next slide, please. So this is the last section we are looking at is documentation, and it is advisable for the PA to document the work that they have performed with respect to tax planning services. Next slide, please. The proposal in paragraph 38023A1 encourages documentation, which is consistent with sections 2 and 3 of the code. So the documentation could include the purpose, circumstances, and substance of the tax planning arrangement, the identity of the ultimate beneficiaries, if applicable, the nature of any uncertainties, the accountant's analysis of the courses of action considered, the judgments made, and the conclusions reached in advising the client on the proposed tax planning arrangement. You could also document the results of the discussion with the client and other parties, and the client's response to your advice. You could also document any disagreements with the client. The benefits of such documentation I explain in paragraph 38023A2, as it assists the accountant to develop the accountant's analysis of the facts, circumstances, relevant tax laws and regulations, and any assumptions made or changed. You could also record the basis of the professional judgments at the time it was made or changed. And it could also support your position if the tax planning arrangement is later challenged by the relevant tax authorities. And it would also demonstrate that the PA has complied with the provisions in this section. Next slide, please. So this is the timeline. And as Carla said at the beginning of the presentation, there was an update to IESBA in December 2021, and then the project went ahead from about March 2022 with respect to the standards development stage of it. We had global roundtables in April, where over 100 stakeholders from various jurisdictions attended the virtual roundtables. There were several presentations to the board before it was finally approved at the December 2022 board meeting. And the proposals with its explanatory memorandum came out on the 17th of February, about 10, 11 days ago. And now we are in the consultation phase, which will run till the 18th of May 2023. So we encourage all stakeholders to submit written comments by that date. After that, the expectation is that the board will review the respondents' comments at the September 2023 board meeting and will carefully consider the various comments made and with the expectation that the final proposed standard will be presented at the December board meeting. Thank you everyone for listening, and Carla, over to you for the Q&A session.
Thank you, Channa, for the informative session, and I hope participants had a bit of more background into the key proposals that we have in the explanatory memorandum. I'll give the participants a few minutes to see if they have any questions to raise, but Channa, in the meantime, while we're waiting, I did receive a comment offline, and the question relates to the stand-back test, the credible, after you establish the credible basis and you do a stand-back test, what does it entail if you're a professional accountant in business being tasked to undertake or structure a tax planning arrangement by a supervisor?
So we recognize in Section 280 the employment relationship, and what a PA in business could do will depend on your level of seniority within the organization. And so if you're reporting to a supervisor and you have a different opinion about the tax planning arrangement, then you'll have to first deal with, provide your views, and if they're not being listened to, you may need to go through other avenues, such as, there could be an internal auditor, or there could be someone else in the finance function that you could speak to. There is an escalation process in Section 280, and ultimately you could also speak or say, speak to those charged with governance if they're accessible, and also consider your own organization's internal policy about reporting things. So that could be an option to consider for PAs in business.
Thank you for that. And I do have a follow-up, but it's not in relation to the stand-back test, but it is some of the feedback we've heard from stakeholders that had concerns that the proposals that we're trying to put forth might override certain tax laws in a local jurisdiction as well. So during the roundtable and the board meeting, we reiterated the message that the Code of Ethics doesn't override any legislation that's already in place in local jurisdiction. So Channa, if you have anything else to add to that point as well.
Yeah, so I mean, right up front in the code, we say that the whole code is subject to laws and regulations. If my memory is right, I think it's 100.7 of the code, which says that it is subject to laws and regulations. So we are not trying to override the laws and regulations of a jurisdiction. It's about having a credible basis with respect to tax planning advice. I mean, we have heard like in different jurisdiction, like, with regard to the credible basis, people sometimes say, okay, what percentage is that? Is it more than 50% good? I mean, we are purposefully not put a percentage on it because we have heard, for example, in the US, if we have a 20% probability of success, as long as you disclose it in a certain form to the US IRS, that is acceptable. It will vary from jurisdiction to jurisdiction, and so you need to consider the jurisdiction you are in and what the credible basis would look like for you. So there are factors that you can look at, and that's in 3811A3.
Thank you for that, Channa. I don't see any questions from our participants. And so we're about to conclude the webinar, and I just a reminder to the participants that the closing submission date for the exposure draft is May 18. And thank you so much for your time today. And thank you so much, Channa, for being available to take us through these key proposals. Very helpful with all the examples that was given.
Thanks, Carla, and thanks everyone for tuning in today. And we look forward to reading your proposals in submissions in due course. Thank you.